Good day, this is your European Open briefing for Monday, 18th July. My name is Michael Florentiades. I am the chief economist here at xm.com, and these are the key points you should know today. The Turkish lira was, of course, on a roller coaster on the attempted coup on Friday. Its failure on the evening on Friday and morning of Saturday, and the ensuing crackdown that appears to follow that coup. The yen today has given up its gains following the coup as investors rushed into safe havens. Less need for safe havens this morning. The New Zealand dollar retreated after weakish inflation numbers. And US data, especially retail sales, had boosted the dollar on Friday, so it's important to remind ourselves of that. And for UK news, there was a Japan's SoftBank bid for ARM Holdings, something in the tune of 26 billion. And there were dovish comments from the rate setting committee in the UK, members of the rate setting committee. Now, in terms of the calendar, there was a holiday in Japan today. There was the New Zealand inflation, of course, and the National Association of Home Builders is going to publish its index later in the day, but a data light day generally. We'll have a look at that. So we'll look at the Turkish lira. It jumped on Friday from below 2.9, from around 2.89 liras per dollar to the level of 3.05 thereabouts, and now it is trading back to around 2.92. So we see that sharp move on Friday reversing itself. There was market relief that the coup was unsuccessful, of course. However, I think the coup shows some uncertainty and the deep divisions inside Turkey, and the ensuing crackdown could create some additional tension and problems. There are also some tensions with the United States regarding the handover of a cleric that is an opponent of Mr. Erdogan, whom Turkey blames for the coup. So yes, the coup was a failure, and that was good news, of course, in the short run. But I think longer run and more looking at the broader picture, it's not exactly something that adds to investor confidence about Turkey. Looking at the safe haven yen, it had dipped to around 104.6 near the close on Friday, but we have dollar yen rallying to 105.8 today, and we have to remind ourselves that the data on Friday was rather positive for the US dollar. On to the Kiwi, we had big losses there as it dipped to around 0.7060 versus the US dollar, but it has rebounded to above 71 cents. This could be because there is also some positive risk appetite this morning, and as we know, the Kiwi is helped by a positive risk appetite. And the big question now is, will the latest inflation data convince the Reserve Bank of New Zealand to move forward with cutting rates? Now, just a reminder what happened on Friday. We had US inflation on a headline level slightly weaker than expected at 1% versus 1.1% expected. However, I would note that core CPI is at 2.3%. That's relatively high inflation, core inflation, for the Fed to be claiming that there is no inflation is absolutely lacking from the radar, and it sees no need to push up rates. So that's interesting. Just make a note of that. There was also a big beat in retail sales. Now, okay, maybe autos boosted this figure, there were some extraordinary factors boosting it, but if we look at the retail control number, it shows that it came in at 0.5% versus 0.3%. So this augurs very well for second quarter growth because these are June numbers. So the consumer in the second quarter was doing very well. Industrial output was also strong. It came out at 0.6% versus 0.2% expected. Michigan consumer confidence delivered a bad miss at 89.5 versus 93.5. My guess is that the survey coincided with some weakness in stock markets and Brexit anxiety. So we'll see whether this consumer sentiment stays depressed. This morning's New Zealand data out of New Zealand, it came in at 0.4% inflation versus 0.5% expected. We are expecting the National Association of Home Builders index later, expected at 60. Overall, it's a data light day. We mentioned that there was also holiday in Tokyo. And just a reminder that the week features very important UK data. We have inflation out tomorrow. Later in the week, we have employment survey for the UK and also retail sales. Tomorrow, we also have the German Zoom survey. We have the ECB meeting, the most important event of the week on Thursday, and its reaction to Brexit. And finally, we have Friday's flash Eurozone PMIs. So those are also important. So as you can see, not so much action on the US front, but quite a bit of action in Europe this week. So that's all from me. Thanks very much for watching and have a great day. Bye bye.